My name is Mr Freeman. I am the VP of Valuation Analytics at Vessel Nautical. I oversee the Valuation and Analytics department of about 20 people across sector, bulkers, tankers, containers, gas, and offshore.
Now, Matthew, here at the annual OSJ conference, you spoke about the OSV market. Can you give us a brief recap of what you spoke about?
Yes, sure. I wanted to leverage my experience of cross-sector valuation and analytics and to look at the bull run that we're seeing in offshore and compare that to the other sectors and look at some of the supply and demand fundamentals that are driving this run that we're on. Now, to me, having looked at the fleet dynamics, we can see a severely underbuilt fleet. There's no new builds. It's an aging fleet. 80% of the fleet for the OSV fleet is over 10 years old. And as it stands in Europe and America, we're not going to see any new buildings coming online soon. We're seeing increased demand in almost all regions, vessels being reactivated, 85 to 90% utility, and the tonnage supply isn't there. Factored into that, you've got new environmental regulations, CII impact coming online. We're not ready for that. We need to be ready for that. So my prediction is that we're going to see some new builds sooner than later. And my prediction is that'll be in China. Simply when I'm looking at the values, which is where I sit, the new build price for a Chinese new build is far closer to a resale price than it is for the other European or Japanese or American counterpart yards.
Now, you mentioned bull run. I think a lot of OSJ readers would be interested. How long do you think this bull run's going to last?
Yes. Again, I hear all the different presentations from my colleagues, and they're talking about all the inputs and the various things that are driving demand. Now, I monitor values, which are the output, which capture all those things, and that is translated into a value. Now, the values have been increasing steadily, 25, 30%. How much further do they have to go? Well, we look at the last super cycle, 2006, 2007, and we saw a PSV, which is 5-year-old, valued around 62 million. We're currently at 32 million. So there is a big room to improve. If you look at that and you take the historical average, the median of the last 15 years, the median is 28 million. So people think we're in a good market. From an asset standpoint, we're slightly above the median. And there is more upside than there is downside. So I would say no ships, values only half where they need to be. I would predict that the bull run that we're on is going to continue to increase for at least 2 to 3 years. Even if you did a new build tomorrow, which I don't necessarily see happening, that's not going to come online for 2 to 3 years. So the supply and demand imbalance is going to continue to grow. According to our algorithms, it's 25%. According to someone that would go out into China and look around the yards and get some quotes, I think the design of those quotes could be questioned, but I think the gap is much smaller there, maybe 5 to 10%.